Okay, good morning. Welcome to Marco on Markets. It's Tuesday, the 21st of July, 2026. My name's Marco and I'll be your host today. I'm going to start with a disclaimer that this channel is for educational purposes only and shares my personal opinions on investment process. Nothing in this video should be taken as financial product advice or a recommendation to buy or sell an investment. Always do your own research and consider obtaining advice from a licensed financial advisor before making any investment decisions. Okay, hope you guys are having a great day. Let me just get rid of that. I wanted to just share the NAB pre-open expectation, which is the ASX SPI 200 futures is trading 37 points down or minus 0.42%. So we should see a negative open on the market this morning. I'll just log into my NAB Trade account and share my watch lists with you. Okay, so that's that. We might just start off with having a look at the US market overnight, or the overseas market. Right, so I do follow a number of stocks overseas. I don't invest overseas directly anymore. I do have an ETF in our superannuation fund, which tracks the top 500 US companies. I think it's called IVV from memory, which is, I think it's Vanguard. I'll confirm that a bit later. But as you can see, for the stocks that I follow, they are mainly green. So we'll have a look at the indices. It was down overnight, but just slightly. It's pretty flat. So what I might do is just update my portfolio values from yesterday. So the last price for Aristocrat was 62.29. Okay, I might have updated this anyway yesterday at the close. I'll just format that to show one more decimal. Okay, Commonwealth Bank 71.20 and 36.66. Okay, I'll just do a refresh. Now in NAB Trade, they do have an estimated open that shows on the watch list up until the point when it does open. Look, to be honest, I don't take a lot of notice of that because, as you see, it'll bounce around a lot, especially right before the market opens. So it is only an indication, and but sometimes it does come in handy. And the times where it's been really important for me is if, let's say I had a sell order on Commonwealth Bank and it was at 171.50, and this was showing as opening as $173, for example, it might be actually worth increasing your sell price to capture a bit more of that gain. But I'll just refresh the screen. Watch these. So let's remember 59.40 and 170.50. So you can see that that's moved. So yeah, I don't really take a lot of notice of it though, because it does move a lot just prior to market opens, and I think it's calculated by the number of orders in the system. All right, so this is my current portfolio of stocks that I'm holding in real life and for YouTube. The only difference is the value invested. The closest trade that I've got is Commonwealth because I'm currently 0.46% up, and we're trying to get to that 2% mark. Yesterday it did get to 1.9. Unfortunately, didn't reach my sell price, so which is on at 174.04. So it didn't go through. In hindsight, should I have sold it? Yeah, of course. Taking 1.9, and then it did retreat actually to below what it opened at. I think it was down 0.3% yesterday. So let's go back to the market. So it's 9.55 at the moment, so that should open. Let's have a little look at, I'll just go through Aristocrat actually, because that's one I've had for now 260 days. I've had that since November of 2025. It is a company that do gaming machines. So when you go to the casino or to your local gaming venue, there'd be a large portion of machines in the casino or gaming venue that belong to Aristocrat, which they, design the games, produce the hardware, and then I assume they sell. I'm not sure if they lease equipment. I'd have to do some research into that. And those machines are being replaced all the time, whether it be them breaking down, or perhaps games get old and people get bored. If you think back to the first time you ever put a 10-cent coin in a slot machine, I remember the bells and the Georges, and I don't know, they were very simple games, and now they're much more technological. I don't really play them often, maybe once a year or once every second year if we're away and there's a casino. I do like to go and have a little play. But yeah, in Melbourne here, I don't really go unless there's like a function on. So back to my purchase. So I purchased it in November of 2025 at 63.86. So 63.86. So that was around there. So right there, and then it dropped away. And ever since, it did drop, went sideways, and then it fell. And only now in the last sort of, let me put is there a measuring stick on this graph chart? I'll go into charts. I think I can do it from there. So the measuring stick is that one. So yeah, sort of from here. Oops. So from here, measuring stick. From here till today, it's not showing me the price. Oh, it's gone off screen. That's a bit annoying. I think it's about 30% because I was down. Look, I can calculate it. So, there it is, 36.8% increase at that price, $44.82. I just want to show you how stock prices can change. At $44.82, yeah, I was down 28% adjusted for capital, adjusted for the dividend, or 29%. So that was only back in just before April. So That's how quickly the market can turn. All right, so it's 9:59 a.m. and the market should have opened by now. Let's just refresh. Aristocrat. All right, so it's down 0.43%. So that's retreating. I'll go to my watch list. I'll have a look at just the stuff I'm holding for the moment. And it's a red day, just as the NAB indicator suggested. So we've got Aristocrat down. I'll just update these values in my portfolio view. 72, 173, and 36. Okay, so now we are down on capital, down 2.89% for Aristocrat, 68% for Accent Group, 0.23% for Commonwealth, and down 1% for Westpac. So it doesn't look like being a great day. So that, may hold for the rest of the day. It may get worse or it may improve. I don't have that crystal ball. I wish I did. So 0.7363. So yeah, it actually looks like it's getting a little bit worse. If I just have a look at all the banks, just want to see what they're all doing. So they're all down. So it's not going to be a good day today. I'll just have a quick look at all of my approved stocks. So every one of them is down except for Woolworths, which is interesting. Have to see, perhaps they had an announcement or it's unusual. Let's have a look at their news. Where's the news? Oh, there it is. Sorry, I can't see it for looking. Yep, so there's no announcements and no news. So it's just an outlier that happens. And it's dropping as well, so it'll probably join the rest of the market. So the West one in my watch list is Westpac, which I have that one, and the one that's doing the best is Woolworths. VEA, Viva Energy, is flat. That's interesting. I think there was some more action in the Strait of Hormuz last night, so that's likely to push oil prices up and in turn increase the share price here. All right, let's have a look at. I have another list just out of interest list that I follow. There's, I get tips along the way, or when I listen to stuff along the way, I just add it into my Australian list of stocks. So any that are worth pointing out. CTT, which is satire. That was like a really hot stock a few years ago. I actually stupidly considered buying it at like $2.80 or something, and now it's 19 cents. It's a really good example of the risks, I guess, involved in share market investing. If we just change it to, say, 5 years. So you can see it was up as high as $4.60. I think I considered buying it at around $2.80. Yeah, around here. And then it did drop and then it started bouncing back. And today it's now 18 cents. That's a huge, huge drop. So you need to be very careful when selecting your stocks. Where is my selection criteria? I think it's this one. So these are the things that I'm looking for generally when I'm selecting stocks that have a really good turnover, preferably a company that has turnover that's increasing, and also has a minimum of $1 billion in turnover. Sounds like a lot of money, but like a legitimate business, $1 billion is not really that much. A company that makes at least $100 million in profit in a year, also that's not a huge amount of money. And again, also a company that has profits that are increasing. A new one that I added after my Xero experience was a company that pays a dividend. So when you've got an opportunity cost to consider, if you've got a dividend covered, as I've mentioned previously, it reduces your opportunity cost that you've foregone. So I sort of explained that yesterday, where, say, for example, in Aristocrat, I think the interest that I could have saved by having that $40,000 invested, in an offset account for a property loan, would have been about $1,700. And as it stands today, I'm down $1,100, and on top of that, I've paid $1,700 in interest. So that's where a dividend can sort of just reduce the pain of that a bit. I do apply that simple moving average of 89 days, and I'd prefer to buy above that line. And then a share price that's generally trending upwards. Like if you have a look at some stocks, they just, like if you look at it, where's a good one? Say AX1, I haven't gone through that with you yet, but that's one that I've had for like 500 days now. I purchased like 3 lots of it, and now I'm down about 68%. And really, at the time, I should have probably really done a bit more research. Also, it was falling at the time, but it wasn't alarming. I think my first order, let's have a look. My first order was in January. I had traded it prior to that, so I'd had some successful trades. So in January, I bought 2 lots, $2.39, then $2.28, and then $1.76. So in January, I purchased it here. I mean, if you forget about what happened and having a look at it right at that point, it probably was looking still okay. I wouldn't have thought it was going to drop away. If we go back a bit further, 2025, so sort of around here, you probably wouldn't have thought it was going to drop. And then what did it do? It fell. I bought a bit more. And look, they had some downgrades in profits. More recently, they've had like a company takeover. There's a company called like the Fraser Group, and they're trying to buy all the shares on market. I think they have to try and achieve about 90%, and then they can take control of this company. But it's a good example. One lesson I did learn from this was not to average down, like not to reduce your average cost by buying more shares at a cheaper price. Look, it has worked for me a number of times, but I did it I've done it with this company and it hasn't worked out well. This is the only loss that I've ended up realizing, well, I haven't realized it yet, but it's unrealized. I am hoping that it recovers. Time will tell, and we'll keep watching it. But the other one I'll just touch on quickly is Xero. I'll get up my stats. I had a similar experience, and it took me like 900 days to recover my funds. So I think that was, I paid like $140 a stock around here. It was around January of 2022, and I purchased. I actually purchased about 4 parcels. I purchased it on the way down, and then it just fell away. So it went from like $140 all the way down to 70. So it would have been down around 50%. And then it did increase, didn't quite get to a break-even point. I still held on. It fell away again. It got close. It fell away, and then eventually it did reach my original price, and I was very stressed over that. I think it was 2.5 years. Especially down here, being down 50%. That was the first time I'd ever been down 50% on a stock. Xero is an accounting software. It's one that I use. A lot of people in our industry really speak highly of the product. It's very sticky. That being said, because I was just so stressed about it, and I was so relieved in around July it was, yeah. And I remember that. We got our money back, and then I think I did take a small profit in the end. It wasn't enough to cover all the interest that I would have, the opportunity costs that I often talk about. It wasn't enough to cover that, but purchase price, sale price minus purchase price, it was a small profit, probably around, I'm trying to think, I'd have to look it up, but it was probably around 2 or 3% over 2.5 years. So not a good return, but I was very grateful to get my money back. But then what did happen after that, which is common when you've held a stock for a long time, is that it did continue to climb, and it went up to about $180, 185, there it is, and then it fell away, and then it got up to $194, which was huge. So actually, after waiting all that time, and I made a few dollars, and then I actually missed the whole upside. Anyway, it's hard to explain unless you go through it. It's such a relief when you can get your money back after being down 50%. Anyway, it went up to 194, and actually today it's lower than one of my lows. And the lesson I learned after this one was not to buy, because they don't pay dividends at the moment. And so in that whole 2.5 years, I didn't get a dividend, so I was effectively paying interest on those funds. So when, with my criteria, I did then add in this one about, it has to pay a dividend. We've done the simple moving average, 89 days, and generally trending upwards. Okay, so let's go back to the market, see how it's going. I'll go to just my holdings. Okay, so actually Aristocrat's now up 1.33% for the day. I might just update that on my holding. I wasn't expecting that after it being down So on capital, I'm down 1.6, so 1.16%, and after adjusting for dividend, I am up 0.39%. So that's really interesting. So that's the one that has climbed back 30 odd percent from just in the last sort of 3 or 4 months. And Westpac's gotten worse, and Commonwealth's 1% down now. I just want to explain the relationship between when a share goes down and when a share goes up, because you might think, oh, if a share falls by 20%, it only has to go up 20% to get back to where I was, and that's not quite correct. So when a share price falls 20%, actually has to go up 25% to get back to where you were. So if we think, a real simple example is, if you've got $100 stock and it goes down 10%, so that's $10 there, and then your price ends up being 90, okay? And then from $90, if it goes up 10%, which is $9, then your share price now is $99. And that is actually short of the original 100. Does that make sense? So if I refer to this chart that I made up, it actually has to go up 11.1%. So let's make that 11.1. I'll just format that so we can see decimals, and then I'll put a formula in here because I can't work out. I know it's 99 point something. Close enough. That's rounded. If we just use the absolute number, we get $10. So let's do one more example. A bigger example is easier to follow. So I mentioned before with Aristocrat, it was down 29%. Well, let's just call it 30, right? So it had dropped from 60, what did I pay? Aristocrat average price is 63.86. 63.86. Let's put a formula in there. So it went from 63.86 down to 44.70 roughly at 30%. And so to go up 30%, it only gets back to 58. So you can see there's a shortfall. So if something goes down 30, it has to go up more than 30. It has to go up 43. And as I showed you with that line calculator before, it has actually increased like 38% since the last 3 or 4 months. So when it goes up 42%, so that's roughly about another 5% increase still to go, then I get my money back. These are rough numbers. As you can see from this view here, I'm down 1.16%. So it needs to go up slightly more than that. And then to get to my margin, so another 2% on top of that will get me to the sale price of 65. I'm trying to get to 65.22. We'll just make sure that order's on 65.22. So it's still got a while to go, but it's getting much closer. If we have a look at the market depth, what the market depth shows you is how many buyers are there, how many sellers are there, what price are people willing to buy at, what price are people willing to sell at. And it also has the trades, which is not working for some reason. Yeah, so you can see all the different price levels and, you know, how many units and how many people. So this is the number of trades. So if you click into, say, this one, for example, You can see that there's 5 trades here. So each trade has a number of units. So this is 5 is the number of trades, 122 is the number of units, and then at this share price. And so if you click on any value, it'll also show you how much volume is ahead of that. So all these added up would be 644 units of Aristocrat shares. And then my one will be 60, what did we say, 65.22. So there we are in the sell queue. It's quite a way away. So it is climbing though today. Look, it's gone up to 63. Look, it's really bouncing up. And you see that stock can really get momentum. So if we have a look at the intraday graph just for the day, I'll just do 1 minute. You can see it opened, it went up slightly, it fell down, and now it's increased. Seems like a large increase. I don't know if there's any announcements. It seems unusual that it's climbed that much. All right, so they have got an announcement that Aristocrat have a buyback. So they're buying back some of their stocks. So they must have plenty of money in the bank and they don't know how to deploy it. So let's have a little read. I'm not sure if that's my computer or that's a dodgy announcement, but that PDF, let me try and open it another way. It's called ASX announcements. Well, that's interesting. I might just try and download that one more time. But so what's happened here is they've uploaded a document as an announcement and it actually doesn't open. I've never seen that before. So if you're watching Aristocrat or ASX, the stock exchange, you've got a document here that is unreadable. But anyway, the crux of it is that, you know, they're looking to buy back shares. And that effectively does increase the share price because it's taking more units out of circulation. And so the people that do hold stock becomes more valuable. So for example, let's dumb it down. If there was only 10 units in circulation and everyone paid $10, then the total market capitalization would be $100. I might just put this on a little spreadsheet. I'll just put it in here. So if you've got 10 units at $10, then the market cap, and this is just a very simple example, market cap is $100. Now the company is going to buy, let's say they buy back 2 units. So we'll just copy this. So they're going to buy back 2 units minus 2. And so the units in the market is now 10 minus 2. The market cap stays the same, but the share price then now changes. So in this example, because where are they getting the money from? Well, they're getting the money out of the bank to pay for the shares. So there's not like new money coming in to pay for those. So the value of your shares or units increases from $10 to $12.50. And that is, I'm not 100% sure, but that looks like what's happening here. So if you do the calculations on, if we could read the announcement, we could work out how many shares they're buying and then what impact does that have on the share price. So currently they've got 601.8 million shares outstanding, which means in circulation. And so this market capitalization currently is 37.5 billion, and that is just a factor of 601. I'm not sure what the short change is, but that's how many units at 63.34, 38. Look, this number could be rounded, so that's why we're getting a little bit of a discrepancy. And I'm not sure if this is updated live or if it's as of yesterday or as of, once a month. But in rough numbers, you can see. So it might be that they're buying back, 1.6% or something like that. And so that's what I would say is why this stock is going up. Some people won't know why it's gone up. They might just buy it because they see it going up and they want a bit more of the action. I'll just update that on my schedule. Okay, so on capital, I'm still down 0.9%. So I'm just going to hang it out. Look, I've come this far. If I get back to break even here and I can get the adjusted gain to say closer to 2%, I'll probably take it and just exit that position. But at this stage, we'll hang in there. They must be making good money. They're buying back shares. Some people say it's disappointing when they do that, rather than say expanding the business and investing more in technology and stuff like that. But maybe they've capped out governments around the world, or at least here in Australia, anti-gambling, which is fair enough. They probably aren't the best things in society, but this is not a political channel, they're a business. And I do believe, all us adults have the choice, I suppose, to gamble. But I do acknowledge that some people are unable to control themselves. Well, I think that's a wrap for today. I'll touch base later this afternoon. We'll watch the market close if I'm available. Otherwise, I will put out a video just commenting on the trades for today. And if I come close to making a sale, I will do a little update and then review the next position. Thanks for watching and have a great day.